Hello everyone. In this video, I am going to discuss about independent branches, an important chapter of financial accounting 4. Here, I will be discussing about meaning and features of independent branches, accounting in respect of independent branches, journal entries for some special transactions between head office and independent branches, and finally, incorporation entries to be passed in the books of head office. First, let us understand the meaning of independent branches. Independent branches are those which act independently within the broad policies framed by the head office in conducting their day-to-day activities. It means, unlike the dependent branches, independent branches are not dependent on the head office for supply of goods or cash required for meeting the day-to-day expenses or even with regard to maintaining the accounts. They act independently, but all their operations will be within the broad policies framed by the head office. So, this is the meaning of independent branches. Then let us see the features of independent branches. The first point says they are not dependent on the head office for supply of goods. They can make purchases themselves, which means independent branches are not dependent on the head office for getting the supply of goods for making cash sales or credit sale to its customers. Okay, but if they are in need of some special kind of goods, then such goods they can get it from the head office. So, this is the first feature of independent branch, that is they are not dependent on the head office for getting the supply of goods. Okay. Then the second one, they can sell the goods for cash or cash and credit at any price they consider profitable. Here you have to understand two important decisions where independent branches have complete freedom to decide upon. The first decision is whether sales will be done on cash basis only or they can offer credit facility to its customers. Okay. Second decision is at what price they are going to sell the goods to the customers. In case of dependent branches, as you have seen in the previous chapter, head office will give instructions on these aspects and they have to follow it. Independent branches, they have complete freedom to decide whether goods will be sold for cash only or they are going to allow some amount of credit facility to their customers. Okay, and then regarding the pricing also, it is decided by the independent branches by themselves. They can fix any price which will give them good amount of profit. Okay, that is the second feature of independent branches. Coming to the third point, they need not remit the money received by them from cash sales and debtors to the head office periodically. They can retain the funds in their own hands and meet their day-to-day expenses. Okay, in the previous chapter, we have seen like dependent branches, whatever the money they generate by making the cash sales and collection from debtors, they have to remit that amount to the head office periodically, and regarding the expenses also, whatever the cash requirement they have, they will get it from the head office. But that does not happen in case of independent branches. Whatever the cash they generate by making cash sales and collection from debtors, they are not going to remit that to the head office periodically. Instead, they are going to retain that in their own hands. Okay, the same funds will be used for meeting the day-to-day expenses. This is the third feature of independent branches. Then the fourth point says they keep a complete set of books for recording their transaction. So they can prepare their own trial balance, trading profit and loss account and balance sheet. As we have discussed in the meaning, independent branches are not dependent on the head office for the supply of goods, for the money required for meeting the day-to-day expenses or even with regard to maintaining the accounts. At the branch itself, they keep complete set of books for recording all their transaction, and at the end of the financial year, looking at those books of account, they prepare their own trial balance and trading profit and loss account and balance sheet. They need not depend on the head office for maintaining the accounts. Then the fifth point says they are required to submit a copy of their trial balance to the head office. Okay, after they prepare their trial balance, profit and loss account and balance sheet, the independent branches are supposed to send a copy of that to the head office, because ultimately independent branches are also accountable to the head office. Okay, these are the features of independent branches. Then let's see accounting in respect of independent branches. In case of independent branches, accounts are maintained by both the branch and head office. Okay, at the branch they keep a complete set of books on double entry system. It keeps the necessary subsidiary books such as purchases book, sales book, cash book, etc., and prepares all required accounts including head office account, head office current account, which is also called adjustment account. At the end of the financial year, it prepares trial balance, trading profit and loss account and balance sheet and submits a copy to the head office. Of course, if there are some special transactions like goods in transit or cash in transit, etc., then it should be considered before preparing the financial statement, that is trading profit and loss account and balance sheet. Then regarding how the accounts are maintained at the head office, here on the receipt of copy of trial balance from the independent branches, the head office will incorporate all the figures and items found in the trial balance and it will prepare columnar trading and profit and loss account and consolidated balance sheet of head office and branch together. Okay, consolidated balance sheet is nothing but balance sheet of head office and branch together. If the adjustments for special transactions are not done in the books of branch, then it will be adjusted in the books of head office before preparing the consolidated balance sheet. That is how the accounting in respect of independent branches are kept both in the books of branch and head office. Then let us take up the next content of the video, that is adjustment entries to be passed in the books of head office for some special transactions taking place between the head office and independent branches. As we have discussed in the previous slide, if there are some special transactions taking place between the head office and independent branches, the adjustment entries regarding that it should be always passed in the books of independent branches. However, if it is not passed in the books of independent branches, then the adjustment has to be done in the books of head office. There are in total 11 special transactions which may take place between the head office and independent branches. Let us discuss that one by one. The first special transaction could be for goods transferred from one branch to another branch under the instruction from head office. Okay, let us suppose that one head office has two branches, okay, two independent branches, branch A and branch B. Here the head office is giving instruction to branch A to transfer goods worth rupees 10,000 to branch B. Okay, in that case A will become supplying branch and B will become receiving branch. Now if the entries have been already passed in the books of branch A and branch B, then there will not be any adjustment in the books of head office. However, if the entries have not been passed in the books of independent branches, that is branch A and branch B, then the adjustment will come in the books of head office and the adjustment will be receiving branches account data to supplying branches account. Here in this example, the entry will be B branches account data to A branches account. Okay, that is the first adjustment for special transaction. Then the second one could be for charging the depreciation on branch fixed assets when branch fixed assets accounts are maintained in the books of head office. Okay, actually here the fixed assets are at the branch and it is used by the branch itself, but accounts relating to that is maintained in the books of head office. In such a case, what is the adjustment required? And the entry will be branch account data to concerned branch fixed assets account. Then coming to the third adjustment, for cash sent by head office to the branch but not received by the branch till the last day of the financial year. Here cash has been remitted by the head office to the branch but it has not reached the branch till the last day of the financial year. Okay, let us suppose that the financial year ends on 31st March and the head office has remitted the cash to the branch on 30th March and it is reaching the branch on 2nd April. Okay, as you know, all the financial statements will be prepared at the end of the year, that is on 31st March. Now on 31st March, cash is neither in the hands of head office nor in the hands of branch, so it should be taken as cash in transit. Okay, now what is the adjustment required? When head office remitted the cash to the branch, it has made the entry branch account data to cash sent to branch account, Now this has to be adjusted because it has not reached the branch before the financial year. Okay, now what is the adjustment required? Earlier they had given a debit to the branch account, so it should be cancelled by giving a credit to the branch account, and they are recording that the cash is in transit. Cash in transit is also an asset, so it should be debited. So this is the adjustment entry where the head office has sent the cash to the branch but it has not reached the branch till the end of the financial year. The adjustment entry you have to pass is cash in transit account data to branch account. Then a similar entry here, fourth one, for goods sent by head office to the branch but not received by the branch till the last day of the financial year. Again, here also head office has sent the goods to the branch, but branch did not receive it till the last day of the financial year. So what is the adjustment required here? In the previous case, that is previous entry, it was cash, but here it is goods. So the entry will be goods in transit account data to branch account. Then coming to the fifth one, for cash sent by branch to the head office but not received by head office till the last day of the financial year. So this is quite reverse to that. In the previous two cases, head office had remitted the cash to the branch and head office had sent goods to the branch. But in this case, it is reverse. That is, branch is sending the cash to the head office. Okay. Actually, for this, the adjustment entry has to be passed in the books of branch. The entry will be cash in transit account data to head office account. If that entry has not been passed in the books of branch, only then the entry will come in the books of head office, that is cash in transit account data to branch account. Again, a similar entry here, sixth one, for goods sent by branch to the head office but not received by the head office till the last day of the financial year. Again, here also branch has sent the goods to the head office, but it did not reach the head office till the last day of the financial year. Here in this case also, the adjustment entry has to be passed in the books of branch, that is goods in transit account data to head office account. But if that entry has not been passed in the books of branch, then the entry will come in the books of head office, that is goods in transit account data to branch account. Okay. Then coming to the seventh one, for payment made by head office on behalf of the branch. Okay. So now you can understand here that it is the payment which actually the branch had to make, but on behalf of the branch, head office has made the payment. Okay. What is the entry required here? When the head office is making the payment, cash is going out of the business and later it should be adjusted to the branch account. So the entry will be branch account data to bank account. Then coming to the eighth adjustment, for receipt by head office on behalf of the branch. Here actually it is a receipt which the branch has to receive, but on behalf of the branch, head office has received. So the entry will be bank account data to branch account. Later it should be adjusted to the branch account. That is why the branch account is credited. Then coming to the ninth adjustment, for payments made by the branch on behalf of the head office. Actually it is a payment which the head office has to make, but here on behalf of the head office, branch has made the payment. So the entry will be concerned payment account data to branch account. Then coming to the 10th adjustment, for receipt by branch on behalf of the head office. It is a receipt which has to be received by the head office, but on behalf of the head office, branch has received that receipt. Okay, the entry will be branch account data to concerned receipts account. Then coming to the last adjustment, that is last special transaction, for head office expenses chargeable to the branch. Sometimes there might be some expenses which is not incurred only for the head office, but it has to be apportioned to all the other branches also. In that case, the entry will be branch account data to profit and loss account. So these are the adjustment entries we have to pass for special transaction that is taking place between the head office and independent branches in the books of head office. Then let us take up the adjustment entries to be passed in the books of branch for the same special transaction which is taking place between the head office and branches. Okay. Now coming to the same first adjustment, for goods transferred from one branch to another branch under the instruction of head office. As I gave the example, there are two branches, branch A and branch B. A is supplying goods worth rupees 10,000 to branch B. Okay. Now you are passing the adjustment entries in the books of branch, so you have to think from the point of view of branch. Okay. There are two independent branches. One is the supplying branch and other one is the receiving branch. You have to pass the entries in the books of both the branches. Now coming to the first one, that is in the books of supplying branch, how the entry will be passed. Okay, the entry will be head office account data to goods supplied to branch account. Here head office account has to be debited because they are supplying the goods to the other branch on the instruction of head office. Similarly, entry should also be passed in the books of receiving branch, that is B branch. Okay, how the entry will come? The entry will be goods received from head office account data to head office account. Here they are crediting the head office account because they are receiving the goods on the instruction from head office. Okay. Then coming to the second adjustment, for charging the depreciation on branch fixed assets when branch fixed assets accounts are maintained in the books of head office. Okay. Here the entry will be depreciation account data to head office account. We are writing here depreciation because the branch fixed assets are at the branch and it is used by the branch. For the purpose of using that at the branch, they have to charge the depreciation, which is an expense. That is why they are debiting depreciation account. Then coming to the third adjustment, for cash sent by head office to the branch but not received by the branch till the last day of the financial year. This adjustment has to be adjusted in the books of head office. If the adjustment entry has not been passed in the books of head office, only then the entry will come in the books of branch. Okay, because the cash has been sent by the head office, the one who is sending has to make the adjustment. If it is not adjusted in their book, only then the adjustment will be passed in the books of other party. If the entry has not been passed in the books of head office, then the entry in the books of branch will be cash and transit account data to head office account. Then coming to the fourth adjustment, for goods sent by head office to the branch but not received by the branch till the last day of the financial year. Here also goods has been sent by the head office, so always the head office has to make the adjustment. If it is not adjusted in the books of head office, then the entry will be in the books of branch, that is goods in transit account data to head office account. Coming to the fifth adjustment, for cash sent by branch to the head office but not received by the head office till the last day of the financial year. Okay, here the branch is remitting the cash to the head office, okay, but it has not reached the head office till the last day of the financial year. It is considered as cash in transit. Okay, so what is the entry we have to pass here? Cash in transit account data to head office account. Then the sixth adjustment is for goods sent by branch to the head office but not received by the head office till the last day of the financial year. Here also goods has been sent by the branch to the head office, but it did not reach the head office till the last day of the financial year. So the entry in the books of branch will be goods in transit account data to head office account. Then the seventh adjustment entry is for payment made by the head office on behalf of the branch. Okay, actually the payment had to be made by the branch, but on behalf of the branch, head office has already made the payment. So in that case, the entry in the books of branch will be concerned payment account data to head office account. Then the eighth adjustment is for receipt by head office on behalf of the branch. Here actually the receipt has to be received by the branch, but on behalf of the branch, head office has already received the receipt. In that case, the entry will be head office account data to concerned receipts account. Then the ninth one is for payment made by the branch on behalf of the head office. Here the payment has to be made by the head office, but on behalf of the head office, branch has made the payment. So cash is going out of the business and it has to be adjusted to the head office account. So the entry will be head office account data to cash account. Then the 10th one, for receipt of money by the branch on behalf of the head office. Head office receipt has been received by the branch on behalf of the head office, then the entry will be cash or bank account data to head office account. Then the last one, for head office expenses chargeable to the branch, the entry will be head office expenses account data to head office account. So these are the adjustment entries for 11 special transactions that is taking place between the head office and independent branches to be passed in the books of branches. Okay. Then let us take up the last content of the video, that is incorporation entries to be passed in the books of head office. Okay. Here on the receipt of branch trial balance, the head office will incorporate all the items found in the branch trial balance in its books. Okay. Here incorporation is nothing but in the books of head office also it will prepare branch trading profit and loss account and branch account to incorporate all the items found in the branch trial balance. Okay, now the first entry will be for incorporating all the items which appear on the debit side of the branch trading account, and the entry will be branch trading account data to branch account. Then the second one, for incorporating all the items which appear on the credit side of the branch trading account, and the entry will be branch account data to branch trading account. Then the third entry is for transferring the gross profit or gross loss. After passing the second entry, we are going to balance the branch trading account and see whether there is gross profit or gross loss. If we get the balancing figure on the debit side, it represents gross profit. On the other hand, if we get the balancing figure on the credit side, it represents gross loss. Okay. Now, how the entry will be made for transferring the gross loss? If there is gross loss, then the entry will be branch trading account data to branch profit and loss account. Nothing but the gross profit will be transferred to the next section, that is branch profit and loss account. The second case, that is when there is gross loss, the entry will be branch profit and loss account data to branch trading account. So whether there is gross profit or gross loss, both will be transferred to the branch profit and loss account. Okay. Now coming to the fourth adjustment or fourth entry, for incorporating all the expenses which appear on the debit side of the branch profit and loss account, and the entry will be branch profit and loss account data to branch account. Then the fifth one, for incorporating all the incomes which appear on the credit side of the branch profit and loss account, and the entry will be branch account data to profit and loss account. Then the sixth entry is for transferring the net profit or net loss from the branch profit and loss account to the general profit and loss account, which means that after we complete the fifth entry, we are going to balance the branch profit and loss account to see whether there is net profit or net loss. If we get the balancing figure on the debit side, it represents net profit. On the other hand, if we get the balancing figure on the credit side, it represents net loss. Whether there is net profit or net loss, both will be transferred to the general profit and loss account. Now the question is, what is the meaning of general profit and loss account? General profit and loss account is the consolidated profit and loss account prepared for the head office and all the branches together in order to get the financial position of the entire enterprise. Okay. Now for transferring the net profit, what is the entry we have to pass? The entry will be branch profit and loss account data to general profit and loss account. On the other hand, if we get the net loss, then the entry will be general profit and loss account data to branch profit and loss account. So the first 6 entries are relating to branch trading and profit and loss account. Now another 2 entries will be for incorporating the assets and liabilities. Under that, the 7th entry will be for incorporating all the assets of the branch. The entry will be various branch assets account data to branch account. Then the last entry will be for incorporating all the liabilities of the branch, that is branch account data to various branch liabilities account. So these are the theory aspects of independent branches. I'll be solving some questions on independent branches in the next sessions. Thank you for watching.